So, good morning, Jarvey. Very good to see you today. And thank you very much for agreeing to do this podcast on a really fascinating subject to me, something that's been talked about for many years, project bank accounts within our sector. But could we start off before we get into the meat of our conversation? Let's get you to do your own introduction. Let's tell us who you are, what company you represent, and really, what that company is about.
Absolutely. Yeah. Good morning, Mark. Nice to see you. Well, my name's Jarvey Moss, and I'm the CEO and co-founder of a company called Saible, Saible. Not sayable, not payable, none of those other things. Saible. Um, and we offer a digitized version of a project bank account. I'm a tech guy originally, new to the construction sector compared to most of the people I'm dealing with. And we are there to solve or to disrupt the current payment culture in the sector and try to improve it to move on from the culture of insolvencies and stress that we currently see.
Oh, that's brilliant. And so what brought you to project bank accounts? It's a strange place to land from tech into construction.
Yeah, well, yes, none of my career makes sense if you look at it objectively. But this one was, I wanted to do something. So I built and sold a previous tech business. And the next thing I did, I wanted to do something that had social value. I wanted to sort of give something back. And on that basis, I started talking to people originally about renewable energy. I thought I'll try and do something in the renewables sector. And so I talked to anyone who would talk to me who had anything to do with renewables. And that's when I started meeting people who built stuff. And one of them, as well as building solar farms, also built houses here and there. And he told me a story about what had happened to one of his subcontractors when somebody in the supply chain went bust, and so therefore he wasn't paid, and the impact that it had on this guy's life. And it was really profound, and it really struck a chord with me, emotionally. And I thought, well, this is a big problem. It turns out, as I subsequently learned, in a really big sector. So it's a big commercial opportunity. But if we can fix that problem, if we can do something about it, then we can make life better for tens of thousands of people. And that's what I was looking for as the next challenge for me. Um, I learned about project bank accounts as I went on the journey of understanding this problem. And I realized that there was an opportunity to take a concept that was a good concept, but poorly implemented, and to apply the tools and infrastructure that the neobanks and the fintech industry has been built on to this specific problem, deliver something new, and then deliver that social outcome that I wanted.
Mm. Brilliant, brilliant. Well, Jarvey, it's probably worth, for the benefit of viewers and listeners, it's probably worth just describing, what a project bank account is in practice, because I think, there's a lot of nervousness around that project bank about the description, and it's sort of bandied around, and people sort of think, oh, it's far too complicated. But actually, you and I know it's relatively very simple in principle. So could just give, for the benefit of everyone, just describe what a PBA or a project bank account actually is.
Absolutely. Well, the concept of a project bank account is not a construction specific one. It's a very simple idea. It's that if you have a project with multiple stakeholders involved, then it makes sense for that project to have its own dedicated bank account. And then the monies for that project flow through that bank account in from the people funding it and out to the people being paid. The concept was actually, I think, introduced particularly in construction, by the World Bank in the 1970s, when they were trying to fund infrastructure projects in countries with low governance. And this was a way for the World Bank to be able to see more about where the money was going. They then came across the UK government, adopted the concept of project bank accounts about 12 years ago, something like that, I think. And they are actually mandated in the public sector already, but not widely used, apart from a few fairly well-known exceptions, such as National Highways, who use them. So the basic concept is a single bank account for each project in which the funds are ring-fenced. They can only be used for that project, and then they are released to the payees on the authority of the account holder.
And so this goes right the way throughout the supply chain, then, doesn't it, Jeremy? That's the key aspect, and it doesn't affect the contractual relationships between the parties. So the contractual bits, which is the sort of the protection that the industry has between each level, are maintained. It is just the money that flows at the same time to all parties. That's correct, isn't it?
Well, that's correct. Yes, in intent, that's correct with a conventional project bank account. However, in reality, they tend not to make their way very far down the supply chain. And there are a few reasons for that. I think one of the things is that in order for a project bank account to be constituted properly, you need a trust arrangement which wraps around the money and or wraps around the account, and that makes sure that that money can't be used for any purpose other than the purpose of the trust, which is to deliver the project. However, adding people to a trust is not straightforward once that trust has been set up. And obviously, at the start of a construction project, you don't necessarily know who all of the subcontractors are going to be. So that's one problem. The second problem, which is not often stated, but I think is fairly self-evident, is that normally the client tends to delegate the administration of the project bank account to the main contractor. And that means the main contractor is responsible for making all of the payments, which means the main contractor knows how much each payment is for, and therefore using a spreadsheet can quite easily work out how much everybody is paying each other and therefore how much profit they're making. And that sort of information, the people further down the supply chain are very keen that the main contractor doesn't generally have, unless it's an open book project. So there are some limitations and reasons why PBAs don't necessarily hit as much of the supply chain as they would like. I think if people understand them, they would want to be paid through the project bank account because it provides a lot of protection. But there are other commercial reasons and just administrative reasons why it doesn't always happen.
So let's move on to your version of the project bank account then, Jarvey. You've actually solved a number of these problems. So do you want to talk through sort of what the key, how your version of this project bank account differs from the standard accounts that we see in the industry?
Yeah, absolutely. We've created what we call a DIPA, which is spelled DIPPA. That's a digital parallel payment account. And we call it that because we want to differentiate it from a conventional project bank account. And we've designed it very carefully to try to address those limitations. So if we pick up what we just talked about, we have a trust agreement, which is it's fairly complex. So our lawyers have had great fun charging us loads of money writing it. But basically, when you sign up for a profile, so when you join Saible, you become a party to all of the future trusts for any projects that you are then join later. So in other words, you don't need to do these deeds of adherence, which are the thing that slows it all down on a conventional PBA. The trust bit is dealt with. And then because we are using a fully digital banking system, you interact with that bank account through the Saible app. And I'll talk a bit more about what you're actually doing there. But the key thing in that is that means that we're not displaying transaction information to anybody who doesn't have to see it in order to do their day-to-day work. So no longer does the main contractor need to know what the subcontractors 3 or 4 tiers down are paying each other. And therefore, that commercially sensitive information is now kept as it should be, and it's not exposed to anybody who shouldn't be seeing it. So that's just the direct things we've just talked about. But maybe if I just step back and explain, as I said, what we've done really is we've taken those tools and infrastructure that already exist for digital banking, and to be honest, they haven't been around that long. We're probably 3-5 years into ID verification on your phone and face recognition to authorize transactions and all sorts of digital signature related things and so on. So you couldn't do this before. And therefore, the people who designed project bank accounts in the past did the best that they could with the technologies available at the time. There are new technologies available, and we have therefore done better as a result of that. But we've built on that same concept. So fundamentally, we open the bank account. It's done inside the app. We are doing all of the necessary identification checks and verification of who people are and what businesses they belong to, and all of that sort of stuff is all done digitally. So it's very much quicker. And that's a big deal because project bank accounts at the moment can take at least 4 months to open. And by then you've usually started work and payments are being made, and you're already behind. So that's quite problematic. And then, as well as the account itself and that trust structure, we then have the Saible app, and that's the means by which you actually interface with the bank account. So it's the equivalent to online banking for those of us who use that, which is pretty much everyone these days. But the Saible app is designed specifically to allow the supply chain, so everybody related to that project, to authorize payments to each other from that project bank account. And the big difference there is that there's no money changing hands until those authorizations are in place, at which point we pay everybody at the same time in parallel, which is why it's a parallel payment account from that protected account.
So just, Jarvey, it's a really important point that I know you and I have talked about, that at sometimes you're going to get into dispute somewhere down that supply chain. Can a dispute down the supply chain prevent payment of everybody else or not? Is that something that you've managed to solve?
Yeah, we have. The first thing to say here is that we're not a contract management or project management solution. There are lots and lots of ways to do your payment applications, your payment certifications, all of that stuff that goes on. That carries on exactly as it always did. We are very specifically about the payment step. So we only get involved after a payment certificate has been issued. And the numbers that you have on your payment certificate and the associated invoice are all you need in order to be able to use Saible. So at least in theory, the disputes take place before certification. Now there are some nuances there. So it's possible that because all of our payments are effectively dual authorized, you have the authority coming from the person who's paying, the customer, and you have a verification coming that matches that from the supplier. That's done by everybody all the way down the supply chain. Now, if that authorization and verification don't match, then we can't make that payment because we can't be certain that the amount is correct. And that means where there is a mismatch, we can't pay anyone beneath that mismatch until the mismatch has been resolved. However, we also aren't paying the person who is authorizing. So there is a strong incentive for the parties to a mismatch to work out what the correct numbers should be. And it shouldn't be that hard to work out because there should be a payment certificate on which those numbers are written. Now, if for some reason, say somebody's on holiday, lost their phone, been hit by a bus, something's happened so that they are not able to take part in that process, when you reach the final payment date, the project owner, or indeed the principal funder, so it might be a lender or government agency, depending on private or public sector, could actually step in to resolve that mismatch and therefore ensure that everyone is paid on that final payment date as they should be. So it's simpler than it sounds when you try to explain it, but the main point, I think, is that there isn't a lot of room for dispute because the disputes happen outside. There is room for mistakes because humans are involved, and some of the mistakes might be more or less deliberate than others, of course, because we are in the construction sector. But where they take place, there's no real incentive to create them At the moment, if you're outside of a project bank account, there's an actual incentive to create disputes, because you will be sitting on your supplier's cash. So you might as well say, well, we're in dispute, and then you've got their cash for a bit longer. In our scenario, that is reversed, because you're not going to get paid unless your supplier is also getting paid.
Mm-hmm. And that's from a funding perspective, that's a very good incentive to make sure the supply chain gets paid. Is it possible for the people down that supply chain to see where the blockage is, so that they know if they're not going to get paid, where the blockage is? Because that again is a powerful incentive to direct where the cash flow should be coming from and where the issues ought to be resolved.
Yeah, absolutely. I mean, this is the beauty of us being able to have our own separate application to allow you to interface with the bank account, is that we can display just the information you need. So we can show you the chain of payments above you, and we can show you where the problem lies, which means if it's your customer or one above, you can get on the phone, or you can go to the site office and you can say, look, I've just noticed that you've got a problem in your authorization and verification there, your payment breakdown basically. Can you resolve it, because you're not going to get paid, but also neither am I.
Yeah.
And if you imagine, if you've got 4 or 5 suppliers, each of them knows where that problem lies. They don't know the amounts involved, but they know where the mismatch is, so they know where the problem lies. And that goes all the way to the top. So if you've got a client who hasn't put the numbers in, everybody in that supply chain immediately knows that there's a problem and why.
Yeah. So I mean, and again, we've spoken about this before. I mean, pay when paid has been outlawed for some time now, and many of those subcontractors or even main contractors down the line, if the money isn't flowing, will still have that duty to pay, even though they're not being paid themselves. And so, is there the opportunity to put money into the account to avoid that position? If somebody's got to pay that subcontractor, the main contractor or tier one can put money in if they need to, and then recover that as and when it comes through.
That's right. Yes, anyone can fund the account, just like any bank account, actually. So all you're doing by funding that account rather than paying the supplier direct is you're creating an audit trail that shows without a doubt that payment was indeed made, and you're not just pretending, so that when you're going to ask for it in your next month or whenever it is that you're going to get it refunded to you. In addition to that, there are situations where perhaps you've got a defect that's your responsibility and you've got to pay for it. So you need to be able to fund the project in order to pay for that defect.
Yeah.
But again, what's happening there is that your money, and it goes into that account, is ring fenced. It's only possible to be used for that project. It's protected. And from a governance perspective, you've got that audit trail. And it really is an audit trail, because when you authorize a payment, we're using face recognition, and it's not just on device face recognition, it's super duper. So basically, it's very hard. Well, I can't say impossible, because at some point someone will find a way, I'm sure, but it's very difficult to claim that you weren't there, you didn't authorize that payment, because we have it. Your face is there.
Brilliant.
And that goes all again, that because of the way that the authorizations are delegated, the authority's delegated down, there's an audit trail going all the way from the bank or the public sector client through the main contractor, all the way down to the plumber or the materials supplier, with a person associated with each of those authorizations.
Mm-hmm. Jarvey, we've jumped into the detail very quickly there.
Yeah, sorry.
And clearly it's clear there's a lot of effort's been spent on both the governance but also the process that's involved there. Let's just take a step back a bit and say, who would actually appoint or promote the project bank account? Who would instruct the project bank account?
It is the client's account, effectively, because they are the owner of the project. So it's the ultimate contracting body at the top. It's also paid for by the client. So everybody in the supply chain is a beneficiary of that trust. They get all of those additional benefits, but they're not required to pay for that.
Mm-hmm.
Having said that, we're we spend a lot of our time in the private sector talking to banks and other lenders, and in the public sector we're talking to procurement frameworks and government bodies, because we want to make sure that the entire industry, from the funds all the way down, is aware of and bought into what we're doing.
Okay. So, and I'm aware of some of the benefits which we'll come on to will also apply to main contractors. Is it possible for a main contractor to appoint to place a project bank account in there and to operate the project bank account as if they were the funding for the project?
I think in principle, yes, but you would need your client's buy-in to do that, because if you imagine the situation I talked about at the beginning, the project owner starts with the right to see all transactions, and then that has to be applied to only those people who are actually supposed to have it. So you can open an account, and then you can transfer that privilege elsewhere. Even the client doesn't have the right to see all transactions unless it's an open book project, for example. But in the private sector, the funder will have that right. So we have to make sure that we reflect the contractual realities that are outside of Saible, inside Saible. Long answer, sorry, but yes.
Yes, okay. Well, let's we've talked around about some of the the machine that makes this happen. Let's again keep this sort of high level. What are the benefits of this? Why should why have you picked this as an area to add value into the sector, some social value? Who's actually benefiting from this, and what are those benefits?
There are quite a lot, so I'll try and keep this short.
Yeah, high level only.
yeah, absolutely. Well, I mean, the big thing that's going on really is about risk reduction, financial risk reduction. We're all very familiar with the stats around the construction industry about insolvency and the knock-on consequences of that. That's kind of the place we started with this. Much of the insolvency is driven by poor payment practice. People are hanging on to cash, they're cash flowing their own business on the supply chain beneath them. They're taking money out of project A to pay for bills on project B, and so on. So where you have a project bank account in place, that becomes it's no longer possible to do that. Basically, you've got to use the project funds for the project funds. And that means you're not going to make money on the money, and therefore you need to put a sensible margin in when you tender your quote for that project. So we want to make the industry more resilient, and we want to make businesses more robust. That means they've got to make real profits from the thing that they're actually engaged to do, rather than from try and increase their profits through other means because they're not making enough on the fundamental work. So it's a risk reduction. There's a lot of efficiencies you can imagine from the way that the payments are actually, that the authorization of payments is delegated out into the supply chain, and the visibility that gives. The audit trail is a big governance benefit as well. There are compliance benefits. So you've got Procurement Act, there's a new one coming, 30-day payment terms. It's trivial to display that you're hitting that if you're using this, because you can see those payments transparently at the very top. Construction Playbook says publicly funded projects should use a project bank account, and most of them don't, so they're actually non-compliant as far as the playbook is concerned. And then there is actual social value in what you're doing if you're using this a system like this, because you are therefore paying your suppliers on time, but you can also show how big they are, because we know if you're an SME, because we're KYC checking, KYB checking, know your customer and know your business checking everybody. So we can report back how many SMEs are on a project, and we can report where they're located. So you can show that money's going into the local economy from your project easily. So there are a bunch of benefits. And I would argue, I'm sure people may disagree, but I would argue that everyone's a winner if you move to this world. The one exception is those businesses that are currently misusing their clients or their customers or their suppliers, money. And if you're put on a project and somebody doesn't want to use this system, or if you're a client and you're starting a project, someone doesn't want to use this system, my immediate question would be, well, can you tell me what you're planning to do with my money then, please?
Very good. I mean, Jarvey, this is, we've had a number of insolvencies. I know you're based in Birmingham, where we had the Carillion debacle, and many businesses went bust as a result of not being paid by Carillion when they went under. Could you just describe what happens in the event that let's take a main contractor, it could be a tier one subcontractor, goes bust? How does the project bank account actually protect the project and also the suppliers underneath it? Just talk through that from a sort of very high level basic arrangement.
Well, the big difference, I think, is if you think about the current model where you're outside of a project bank account and everybody is just paying each other, for reasons we've already discussed, the chances are that higher up the supply chain, you will try and sit on the cash because it's cash, and it has a lot of value if you have it. So you'll be sitting on your supplier's cash. So you might be being paid on 30-day terms by your client, by the client at the very top. But the likelihood is that a little bit lower down, people are on 60, 90, 120 or worse day payment terms, so that businesses can sit on that cash and use it for whatever other purposes they've got. Now, if they're suffering under financial pressure, so if they're close to insolvency, they will just push those payments out even further, so 120 and beyond day terms. That means when someone does go pot in the supply chain, they're not just taking that month's money, they're taking 3 or 4 months worth of money out of the project, which is a problem for everybody. It's a problem for the client because the client thinks they've paid for all of this work, and actually the work has been done, but that asset hasn't been transferred for cash. The cash has gone elsewhere. Obviously, for everyone in the supply chain, it's really bad news because they're sitting 3 or 4 months worth out of pocket. They've been paying their employees, they've been paying their suppliers, and they're suddenly out of pocket. And that's where you get these cascading insolvencies. And Carillion is a great example. There were, literally hundreds, I think probably thousands of insolvencies that followed on from Carillion going. And then, that is the biggest corporate failure in UK history, but they're not infrequent, and there are some very big ones. Now, if you've got a project bank account in place, then the money has been ring fenced and it's coming out every month. Therefore, first of all, you're never going to be 3 or 4 months in the hole because everyone's getting paid month by month. And second of all, if that main contractor or large subcontractor does go bust, the only money in that account that is in any way their asset is what is owed to them specifically for that month. So the rest of the money is available to pay everybody in the supply chain. And in our model, certainly, the entity directly above the one that's gone bust can step in and effectively pay all of those suppliers further down direct. And the money to do that is still there. So there is no need for the supply chain to walk off site because they will continue to be paid. And this gets really important, especially towards the end of projects. You get, in the private sector, developers go bust, it happens. And then the bank needs to finish the project because otherwise they don't have an asset that their loan was secured against. They can't realize it. So they can step in if they need to and make sure that those subcontractors continue to be paid. All the quantity surveyors carry on doing their jobs as if nothing had really happened. Obviously, you've lost expertise and you've lost a supplier there who was hopefully adding value. So it's not that there would be no impact on the project, but it would be much less significant.
Yeah. And these benefits are as appropriate to a main contractor as they are to a client. And there are many main contractors who have suffered terribly when their mechanical and electrical contractor has gone under for probably quite often problems on other jobs elsewhere, as you described earlier. So that sort of protection mechanism and ensuring that everybody in the supply chain is on site and being paid can apply equally to the benefit of the client and the funder as it can to the main contractor.
That's right. And as I said, in the private sector, particularly, clients go bust as well. But because the bank is paying directly into the project's account, the money is still there to pay the main contractor and everyone in the supply chain, even if the client has gone. So to me, it's a very sensible way of
Yeah.
looking after everybody.
So just talk to me about retentions, which is often, often seen as the profit on the job is being held and never seen by supply chain. Just talk to me how Saible would deal with retention on your model.
Yep. Well, for us, there are three states when it comes to retentions. Either your project doesn't have retentions on, in which case that's easy.
Yep.
You have retentions that are retained within the project's account. So in other words, when you do your payment authorization each period, you'll be putting in there how much is being retained. And that just sits then in that project's account where it is protected by the trust. And then at the end of the process, you've got practical completion when you get your sign off there, provided you've remedied any defects, then the retention is paid. It's just like any other payment. It's no different to any other payment. And then at final certification, a year or two down the line, then any remaining retentions can be released as long as the defects have been dealt with. So for us, a retention is the only thing that's different about retentions to any other kind of payment is how long the money is sat in the account for. But as a member of the supply chain, you know that provided you've done your work and it's been certified, you will receive that retention payment direct from the account. Alternatively, retentions can be held outside of the project's accounts because very often, particularly private sector, they don't want to put them in and have to pay interest on them for all of that time because you're borrowing that money from the bank. But there, the bank will generally hold the money and then they'll pay it into the project's account and straight back out again, exactly as if it were any other payment. So this, if you use a project bank account in this way, then retentions should be much less controversial than they currently are.
And presumably, because it's a trust account that you've set the project bank account into, it will comply with the sort of the standard JCT requirements of these retentions needing to be held on trust. And whilst that's an amendment that many lawyers will strike out, actually it is a standard arrangement that protects the supply chain's money.
That's right. Yeah, absolutely. Interestingly, as I understand it, I'm not a lawyer, so this is not legal advice, but I think theoretically, even if the bank is holding on to that money rather than it being in the project's account, it is still part of the subject to the trust. But I think a lot harder to go and grab it in that case than if it's in the project's account.
Yeah. The one benefit, Jarvey, we haven't talked about is the bonding requirement. Now, bonds are becoming they're becoming more challenging in the construction sector, particularly as the business cycle moves into this area where there are insolvencies happening, and we're aware that we're still something over 1% of our businesses are going bust each year. Just talk to what's the impact of a project bank account on the bonding requirement that clients ought to be looking for?
Well, the requirement to have a performance bond in place, as I understand it, is basically an insurance policy against insolvency. That's what they're really there for. Now, in the scenario that you're using a project bank account, as we've been discussing, in the case of insolvency, the impact is enormously smaller than it would be in the conventional setup where you're outside a project bank account. Therefore, the requirement for a performance bond is either very much smaller or disappears completely. And this is a big money saver because performance bonds are expensive and that cost is obviously a cost for the project. So we shall see what the bond market actually does, when these start to come in, but I would expect that the need for bonds either disappears completely or at least is much, much smaller than it currently is.
Great. So, gentlemen, we've looked at all the benefits or some of the benefits. Let's talk about the cost of this arrangement. So, for all these wonderful benefits, how much do you think it costs to put a project bank account in place? How much does Saible charge for this wonderful service that you might be able to provide?
Checks in the post, Mark. Thanks. We charge a transaction fee, so it's very transparent. We charge a 0.25%, 25 basis points transaction fee, and that means for the money moving out, then 0.25% of that is payable to us. On £1 million, so you've got £1 million project there, £1 million worth of payments going through. Our fee on that would be £2,500. So that puts it in context. And perhaps also to add a bit of additional context, when I go to the newsagent and I buy myself a Cadbury's Dairy Milk, or other chocolate bars, of course, are available, the merchant there, the newsagent, is going to be charged about 0.2% by Visa or whoever is handling that payment on a debit card. So we are only really charging what it costs to move money when you're buying a Cadbury's Dairy Milk, but you get a bunch of additional stuff. So obviously I would say this, but I think it's a no-brainer in terms of the value. The cost of late and non-payment on construction projects is estimated between 3.8 and 5.2% of project costs. Every time you say that to anyone in the industry, they all laugh and say that's far too low, but that's the stated cost. So yeah, so it's pretty cheap.
Brilliant. And yeah, I'm aware that the Highways Authority would say that PBAs are effectively giving them an extra 2.5% of value on their projects just for the PBA. So clearly, 0.25% compared to 2.5% is a big value improvement.
That's right. It's an order of magnitude, and that is only for the increased collaboration. So they're not even talking about any of the. So if you think about the cost of credit in the supply chain, for example, if you know you're not getting paid for 90 days, but you've got to fund your own business, even if all you do is sacrifice the interest on the money that would have sat in your account for a quarter of a year, you're already up as a supplier in there. And because the supplier is not paying for our system, they can either therefore make more money, better margin, or they can drop their costs. They can quote cheaper in order to win the work. And that compounds all the way through the supply chain, right down to materials, all the way up to the main contractor. So we should be able to deliver more for less money if we can sort out the payment culture.
Yeah. Brilliant. Jarvey, we've had a good run through your dipper and how it relates to the project bank accounts, which many of our listeners will be more familiar with. Clearly, it's a great use of technology in providing this different service. The new technology you talked about to provide a service into construction that will ease this really perennial problem about money flow through the sector. We've got sort of final question then. What's your aspiration for Saible over the next sort of 3 to 5 years? Let's say 2030. What do you think? What's your aspiration for the industry by 2030 with your product?
I would like us to be the equivalent of Visa, but for the construction sector. So I want Saible to be the way that people pay and get paid for construction projects. That's our goal. And we'd like to be doing that internationally. We're starting in the UK because we're from the UK, but this problem exists all over the world. And if we can do that, then we will have succeeded in the mission that we have set out for, which is to transform the payment culture and therefore the lives of people working in the construction sector.
Well, no small aspiration to finish up with, Jarvey. That's a great aspiration to have. We've had a great canter through. Thank you very much for your time. Wish you all the luck, and really look forward to seeing how your product is used in the sector and the benefits that come from it. And we'll watch this space. But thank you very much indeed.
That's great. Thanks a lot, Mark.